So they told me that you would need $5 trillion to crack a $100 XRP. Now I just realized they're off by, oh, well, about $5 trillion. Is your mind blown yet? Well, keep listening. All right, so picture this, right? I'm scrolling through my phone at some ridiculous hour. Eyes half shut, coffee nowhere in sight. When a buddy of mine pings me, dude, XRP can't hit $100 unless Wall Street wires in a mountain of fresh cash. Now it's the same claim that I've heard 1,000 times, but this time I stumble upon a angel investors thread. This is 𝗕𝗙𝗪𝗪𝗪𝗪, right? That kind of flips at least that idea inside out like a kind of cheap sock. Now, suddenly I'm wide awake, right? I'm hunting for my notepad because what he said is the financial equivalent of discovering gravity falls up instead of down. All right, so let me kind of walk you through why your wallet might not need a kind of megaton of new money kind of sloshing around for XRP to sprint to that kind of century mark, and why most TikTok crypto gurus have actually been unknowingly recycling the same kind of busted math. Now, I promise, by the end of this story, you'll never look at market cap the same way again. You'll have a shiny analogy that you can break out at parties, and you'll probably want to kind of peek at that kind of dusty XRP bag buried in your exchange account. And speaking of exchanges, quick heads up, if you want a clean interface and fee discounts, while you're kind of poking around, why don't you check out Blowfin via the link that's in the description down below. It's hands down my favorite new kid platform to actually kind of let me test some of these price theories in real time. And if you kind of prefer kind of chatting strategy instead of yelling at kind of the Twitter void, why don't you join our free crypto Discord server via the link that's also in the description. Hop in, say hi, lurk, ask questions, whatever it is you want to do. And the coffee there is always hot, at least in text form. Okay, so why is there this grand kind of misunderstanding then? Well, it actually starts with market capitalization. You know the definition, right? Price times circulating supply. It's easy, right? But humans, sometimes myself included, shortcut that number into how much cash has entered the room. It's totally wrong, right? Market cap is a price tag. It's not a piggy bank, and that's really important, right? The price tag moves faster than cash deposits. So imagine a flea market where one antique lamp sells for double the expected price. Instantly, every similar lamp spouts to a fancy new sticker, right? And even though only a single buyer actually cracked open their wallet, and well, that's crypto. Thin liquidity, lightning fast repricing. So 𝗕𝗙𝗪𝗪𝗪𝗪's example kind of nails it, right? Think of a neighborhood with 100 identical houses, right? Each comfortably valued at, let's say, $500,000. Total neighborhood market cap, 50 million, right? But one maniac, or maybe even one manic kind of FOMO-powered buyer, if you will, let's call him Chad, with kind of a freshly approved mortgage, shows up, bids all the way to $1 million because, well, I don't know, maybe there's rumored gold in the attic or something, right? Now, the seller finally kind of bites, and the moment that the deed kind of changes hands, Zillow's algorithm goes haywire. Suddenly, every house on that street should now be worth $1 million. The new market cap doubles to $100 million, but the actual cash that left Chad's checking account, above the old valuation was only $500,000. That's, 50 grand, if you will. No, but $500,000. So that's it. So value doubled, right? Neighborhood bragging rights soared, yet a microscopic slither of the new money did actually all of the heavy lifting. Now, let's swap houses for XRP tokens, and spreadsheets kind of get very spicy. XRP's current supply hovers around 58 billion tokens. That part is fixed. For XRP to kind of show $100 on the kind of ticker, market cap needs to read $5.8 trillion. You can cue the critics in the comments saying, bro, no way, $5.8 trillion flows in, the global money printer would melt. And, well, 𝗕𝗘𝗪𝗔𝗥𝗘 kind of says, hold your horses. And I've been saying this for years, right? Because prices in a thin, order book driven market can leap on surprisingly thin or tiny real inflows. So $20 to $30 billion. Not trillions. Now that's roughly the cost of a mid-sized tech IPO, or Apple's kind of buyback pocket change, if you will. So in crypto world, or at least in the crypto world, we've watched that kind of money wash in and out during lunch breaks, right? So just remember the DeFi summer mania. There's 9-digit liquidity kind of pools, right? Ballooned overnight because yield farming was the new kind of fidget spinner. So let's go ahead and crunch a simple example then, or scenario, right? Imagine $2 billion kind of strolls into the XRP order book, right? Early bids eat up the asks, price kind of edges higher, sellers hesitate because, hey, why dump if momentum's upwards? The order book thins like a kind of desert river. Each tiny buy nudges the price, just a smidge more, compounding the effect. Next wave of buyers, maybe hedge funds sniffing momentum, pile in with another couple of $1 billion. The price doubles. Tweet storms erupt, retail wakes up, scrounges kind of, couch cushions and adds up another round, right? The whole vibe kind of spirals out of control, right? Pretty soon you've got that one house sold at $1 million moment. Latecomers reference the last trade, not the average trade. Market cap prints a massive new headline, and the fresh capital that triggered it is still measured in single-digit billions. It might sound bonkers to a lot of people, but we've seen, miniature kind of versions over and over again in crypto. Bitcoin's march from $4,000 to $20,000 in 2020. The chain analysis folks, they estimated net new inflows were a fraction of the headline value created. Meme stock veterans know the drill too. GameStop, AMC, one absurdly high print, and every share inherits that price until reality rechecks the math. Alright, so here is where it gets personal then. I once tried explaining this to my uncle during a holiday dinner. Now he kind of sells real estate, so I use the 𝗕𝗘𝗪𝗔𝗥𝗘 analogy, but with cookies, right? Because cookies never fail, let's be honest. Now, I kind of stacked 10 cookies on a plate and told him that each sells for $1. Then I waved a single crisp $5 bill and declared that I would pay $5 for just one cookie. Now, instantly, the market cap for the dessert plate, it jumps from $10 to $50. Now, did my wallet vomit $40 extra? No, it didn't. I just said I'd pay more for a single piece. Now, everybody laughed until I refused to share the cookie. My point was made. But let's not kid ourselves either, right? Thin liquidity cuts both ways, right? The same mechanism that lets small inflows balloon valuations also enables brutal drops when exits become a stampede. Now, crypto winters happen because order books fade, right? Bids evaporate, and suddenly the last sale price is way down in the basement. Now, if XRP rockets to $100 on tidal wave hype and no steady demand steps in, well, that price tag can crater quicker than a meme coin rug pull. And let's face it, 99% of meme coins are scammy shitcoins. So pretty much most of them rug pull. Anyway, risk management is what matters here. Don't mortgage the dog. Okay, now, what's actually required for that $20 to $30 billion catalyst then, right? A cocktail of institutional FOMO, payment, adoption, and maybe one juicy regulatory win. Right, picture Ripple kind of inking a multi-billion-dollar cross-border settlement deal with, let's say, a coalition of Asian banks. Well, they would then need liquidity rails fast, and XRP's on-demand liquidity fits that ticket. Suddenly, treasury desks are buying XRP as working capital, not just speculation. So liquidity gets locked, circulating supply effectively shrinks, and price elasticity kind of skyrockets. And that, of course, is the spark. Now, we've already kind of tested micro doses of that future. Remember the 2017 announcement mania, when a single remittance pilot partnership could spike XRP double digits in a single day. Multiply that effect by a real contract size and an environment where crypto custody is bank grade. Sprinkle in a little ETF chatter, a sprinkle of positive court rulings, and boom, order books start resembling Swiss cheese. $5 offers turn into $50. And before you can kind of whisper, flippening, the $100 print flashes on the TradingView window. But wait, you ask, what about circulating supply? Doesn't Ripple hold a massive trove? And it's true, Ripple do. Now, Ripple still locks billions of tokens in escrow, releasing a chunk monthly. But historically, a large portion actually gets relocked if unneeded. At the moment, the ratio is 80-20. 80% gets relocked up and they only utilize 20%. Of course, things can change, but as it sits historically, most of it gets locked up. Now, institutional demand could, of course, soak up those releases quite easily, especially if they're using XRP for utility rather than just day trading. Meanwhile, of course, retail sees green candles and sprints in because, well, nothing motivates keyboard warriors like a screenshot of 10x gains. All right, so let's ground this with numbers so that you can whip them out in arguments. Right, current daily volume for XRP, it sits in around the $1 to $2 billion range on a kind of medium day. Spike kind of days, they hit $10 billion plus. Inject an additional sustained $5 billion of buy-side pressure each and every day for a single trading week. That's roughly $25 billion in total. And you have kind of Pantoja's liquidity range kind of summarized. Nothing in that math demands new global GDP, right? We're just talking about portfolio rebalancing out of other assets. Maybe a hair off the top of the gold ETF market. Maybe funds reallocating from sleepy bonds chasing higher upside. The piece of cake, really. And let's not forget the psychological multiplier either. Once price breaches big, round numbers, think $10, $20, $50, it isn't strictly about fundamentals anymore. Networks like Twitter explode with XRP Army victory memes. YouTube thumbnails turn neon, and my grandma's book club asks me if they should grab just one single coin. The feedback loop compresses and timelines, and, well, juiced up volatility does half of the marketing for you. Now, if you're wondering how to actually capture upside without drowning in slippage, here's that kind of practical plug that I promised earlier, right? Blowfin. Now, I love test driving new exchanges. I think it's great to have exposure to as many exchanges as possible because you never know when you are going to need them. So I always sign up to as many as I can. But I am quite picky at the same time. Now, with Blowfin, their order book depth on at least majors is very solid. The fees are very competitive, and I can set iceberg orders so that I'm not kind of, telegraphing size to the market. So there's a link in the description down below. You can sign up, take the interface for a spin, and maybe even park a limit order ladder just to watch how price reacts. And when you've kind of got questions, you can or at least you want kind of a live play-by-play when volatility pops, you can also drop into our Discord server. It's literally free. Come on in, share your screenshots, and call up my takes. Maybe you even want to call my takes crazy, but it's all fair game down in the Discord server, so why don't you join us? All right, so let me loop back to the skepticism, because a healthy doubt kind of keeps us from becoming exit liquidity, right? Could Pantoja's, I guess, thesis here be underestimating the capital required. And for one, it's definitely possible, right? Models break if sellers flood in faster than buyers. Regulatory kind of surprises can freeze US liquidity, forcing price discovery offshore where order books are thinner. So, there's also the potential global credit conditions that could tighten, sucking speculative cash out of risk assets. No theory, of course, here is going to be bulletproof. But 𝗕𝗘𝗪𝗔𝗥𝗘, isn't claiming, certainty. It's just dismantling a math error here, right? The kind of myths about market cap and a lot of the misconceptions about understanding what it actually represents, because it doesn't represent liquidity, it doesn't represent cash inflows. It only shows you macro level pricing. So liquidity needed in at least is orders of magnitude smaller than what the headline market cap is. And history across multiple assets backs that up, right? That doesn't guarantee $100. It just proves that it's not science fiction and it's not as difficult as a lot of people try to make out it to be. So here's how I personally kind of gamify the situation. I keep a tiny stack of moon chips, if you will. When headlines kind of blare fear and order books look like tumbleweed, I'll probably nibble. When kind of, exuberance drips from every kind of tweet, I peel off a slither. That way I stay emotionally neutral here, right? Which is code for sleeping at night. It really does matter. You don't you need to be all in one way or the other. And do you need to, right? Obviously, I'm not, your licensed advisor, right? I'm definitely not a financial advisor in the slightest. I don't know your financial position. I can't offer you financial advice in any way, shape, or form. But maybe think about position sizing and, that kind of still lets you buy pizza, even if XRP maybe decides gravity does point down tomorrow. And here's a funny kind of side note, if you will. While kind of jotting notes for this video, my neighbor sees the XRP logo on my monitor and asks if it's a new kind of energy drink. I laugh, of course, hand him the real estate analogy in 30 seconds, and he fires back with, so if I overpay for your car, suddenly all Toyotas double in price. And I say it's pretty much, right? He whistles, shakes his head and mutters something about selling his fishing boat to buy tokens, right? That kind of ignition phase of hype is right there. When normal people kind of attach everyday examples to a price chart and the mental kind of pump or jump, suddenly feels quite logical. You watch for that sentiment, right? Because it is a bit of a tell. Now, before we wrap up this video, let's zoom out to a macro lens, right? Global cross-border payments are forecast to top $250 trillion in volume annually by the end of the decade. Even with a razor-thin slice flowing through XRP's on-demand liquidity rails would create a constant buy-side churn. Now, those aren't one-off speculative pumps. That's utility-driven demand, and utility is sticky, right? It locks users, not just hodlers, right? Combine that with, periodic kind of supply unlocks managed by Ripple, and the stage is set for a classic squeeze, shrinking float, rising throughput, narrative tailwind, and that's the rocket fuel for price appreciation. So, do I believe $100 happens tomorrow morning? No, it's very unlikely, right? Markets climb walls of worry, then tumble down, for a kind of a moment in time for maybe just sport. But could a confluence of regulatory clarity, adoption deals, and leverage kind of driven short squeezes sling XRP to triple digits within a kind of furious bull cycle? Well, it's absolutely possible within the realm of reason, right? Especially now that we have evaporated the need for, well, $5 trillion. And so, the next time that someone spouts that line, offer them the cookie example, or the $1 million house example, right? Or just forward them this video, right? Assuming they're the kind to, at least kind enough to share, your secret sauce with them, that is. And If you do, of course, forward the video, warn them that occasionally we geek out in the Discord server with charts so nerdy that they might require safety goggles. Okay, so here's a quick recap then, right? I set you loose. Market cap is a mirror, not a vault, right? Thin liquidity, it means small inflows stretch reflections into skyscrapers. Now, you've got Pantoja's math suggesting $20 to $30 billion, not trillion dollars, could take XRP to $100 under the right cocktail of demand and scarcity. Gravity still applies in reserves too, so manage risk. But the next time that you hear impossible, remember how one overpriced house repriced an entire block. Now in crypto, the neighborhood is global, the houses are digital, and the buyers never sleep. Alright, so if you want deeper dives, sign up on Blowfin with the link down below, slap some limit orders, and watch how the order book dances. Then swing in our free crypto Discord server to brag or commiserate on your feels. I'll be hanging out there, coffee in hand, staring at the chart, so you don't have to.